What's going on, you guys? My name is Kyle. I'm a full-time futures trader and founder of Opinicus. This video is actually a quick segment from a recent trading mentorship group where I'm asked about what my gap rule is. If you tune into our daily live streams, you'll sometimes hear me talking about gap rules apply, watch for the gap rule, things of that nature. This is a breakdown of what that rule is. The gap rule, as I define it, is number one, you need a gap outside of the prior day's range for a true gap. Now, we'll have scenarios where, like for instance, today, trend day move, price gaps higher, still within the prior day's range. There can be some aspects of the gap rules that you may want to apply in those scenarios, but broadly speaking, I'm typically applying the gap rule when we have price leaving the prior day's range as we get into the open. So the best way to see this is a regular trading hours chart. Here's your prior day high, right? Here's your prior day low. Here's the open. And the rule is to wait for the first 5-minute bar to close and see, is it bearish or is it bullish? Who's taking control off the open? Who's in control? Are we going to have some sort of gap and go type of setup, which is what today was? Like, is the gap going to show continuation essentially? Or is there going to be some attempt to close the gap? Now, in this scenario, if we do see that opening 5-minute bar break lower, then the rule for me is to not take a trade until 10 a.m. reversal time. Now, I do have some exceptions to that rule, but again, generally speaking, broadly speaking, there's no trades to be taken that are counter trend until 10 a.m. So this again applies for both long and short. In this example for today, we open lower. Opening 5-minute bar is showing us that sellers are stepping in off the open. We then see that bar show continuation. No longs. No longs can be considered until 10 a.m. And the vice versa would be true if price is gapping up outside of the prior day's range, let's say up through here, right? And the opening 5-minute bar is going to kind of guide my decisions for the first 30 minutes. Do sellers step in right off the open? Okay, well, I'm going to look for that gap to fill, and I'm not going to be trying to fade that move until 10 a.m. And remember, there's the lens through looking for long setups, right? Because I trade long only. And so in this scenario, if price had gapped higher and buyers stepped in off the open, I'm just looking for an entry then. Looking for an entry to get long and hopefully ride into 10 a.m. So those are the gap rules. If you guys have questions on that, let me know, but it is pretty simple.